What if I told you that the Florida housing market is experiencing a significant shift, a shift that could impact not just homeowners, but the entire state's economy? Picture a scenario where the housing supply is not just ample, but it's actually overflowing. At the same time, the demand for these homes is strained, almost like a rubber band stretched to its limit. Now let's toss in spiked home prices, and you might think, well, that's not so bad. Higher prices mean more profit for sellers, right? However, when these price increases are coupled with skyrocketing mortgage rates, the equation begins to change. Potential buyers are left scratching their heads, wondering if they can afford the dream of owning a home in the Sunshine State. But wait, there's more. Homeowner insurance premiums have seen a sharp rise as well, adding to the mounting costs for homeowners. And let's not forget the homeowner association fees, yet another addition to the growing list of expenses. What we're seeing here is a classic case of market softening. It's a scenario where supply increases and demand decreases, leading to a slowdown in the rate at which prices are rising, or even a drop in prices. This shift in the Florida housing market is not just a blip on the radar. Instead, it's a trend that's been highlighted in various news articles. These articles not only shed light on the current state, but also point to a potentially concerning future. For instance, an article by Business Insider reported a significant interest rate hike by the Federal Reserve, sparking concerns about a potential recession. This, coupled with the other factors we've discussed, could exacerbate the market softening we're currently witnessing in Florida. It's not just about homeowners or potential buyers feeling the pinch. The implications of this shift could ripple through the entire state's economy. The housing market, after all, is a significant contributor to Florida's economic health. Indeed, the numbers don't lie, and they are painting a rather concerning picture for the Sunshine State. Now, let us delve deeper into the factors causing this market softening in Florida. To start with, there's been a significant increase in the housing supply. With more properties available, sellers are finding it harder to secure buyers. This oversupply is due in part to the relocation trend observed during the pandemic. Many affluent homeowners moved from major cities to suburbs and vacation spots, seeking more space and amenities at lower costs. This shift has led to a surge in home sales in some areas, but it has also resulted in an excess of properties in others. Next, we have the spike in home prices. The demand for luxury properties in secondary markets has exceeded expectations, leading to bidding wars and rapid sales. This has propelled property prices to new heights, making it more difficult for average buyers to enter the market. Then there are the mortgage rates. The Federal Reserve's recent interest rate hike has sparked concerns about a potential recession, causing market volatility. Higher mortgage rates make purchasing a home more expensive in the long run, further discouraging buyers. Insurance premiums also play a significant role. With the threat of natural disasters such as hurricanes and floods, insurance costs in Florida tend to be higher than in other states. These additional expenses add to the overall cost of owning a home, pushing potential buyers away. Lastly, we must consider the homeowner association fees. These costs, which cover services like community maintenance and amenities, can be quite substantial. As these fees rise, they increase the total cost of homeownership, further straining demand. As we can see, these factors are intertwining to create a complex issue for the Florida housing market. But what does all this mean for the demand side of the equation? Let's dig deeper. It's no secret that the increasing housing supply for sale in Florida, coupled with strained demand, spiked home prices, heightened mortgage rates, and higher insurance premiums, not forgetting the steeper homeowner association fees, have created a ripple effect in the market. An interesting trend to note is the shift of wealthy buyers from major cities to smaller cities and suburbs, as reported by Coldwell Banker. This trend, largely propelled by the pandemic, has seen luxury home sales surge in places like Phoenix, Colorado, and Dallas, attracting buyers from high-cost areas due to tax benefits and lifestyle changes. But where does this leave Florida? Well, the demand for luxury properties in secondary markets has exceeded expectations, leading to bidding wars and quick sales. However, the market softening across much of Florida tells a different story. It's clear that the state is grappling with a decrease in demand, triggered by the aforementioned factors. The Federal Reserve's 75 basis point interest rate hike has also played a role. This move sparked concerns about a potential recession, causing market volatility to subside. Tech giants like Alphabet and Microsoft have shown resilience, but the real estate market faces a different challenge. US stock futures fell as investors waited for GDP data, while Bitcoin traded above $23,000. These financial shifts are not isolated events. They're intertwined with the real estate market, influencing investor decisions and subsequently housing demand. Here's an important takeaway. These shifts in demand are not just numbers, they're real people making tough decisions about their futures. It's families weighing whether they can afford the home they've always dreamed of in the Sunshine State. It's retirees questioning whether their hard-earned nest egg will stretch far enough. And it's investors wondering if Florida's real estate still promises a fruitful return. So, as we delve into these factors impacting Florida's housing market, it's essential to remember the human element. Because at the end of the day, it's not just about houses and market trends, it's about homes, dreams, and the people whose lives are impacted by these shifts. These shifts in demand are not just numbers, they're real people making tough decisions about their futures. So, what could this mean for the future of the Florida housing market? Well, if current trends hold, we're looking at a situation where an oversupply of homes meets a shrinking pool of buyers. This could lead to a further softening of the market, with house prices potentially seeing a downward trend. But it's not just about the price tag on the homes. Higher mortgage rates, insurance premiums, and homeowner association fees can also add to the financial strain for homeowners and potential buyers alike. A report by Coldwell Banker highlighted a shift from big cities to suburbs and vacation spots during the pandemic. Now, with the market softening in Florida, will we see a reverse migration? It's a possibility. Cities like Phoenix and Dallas, which saw a surge in luxury home sales during the pandemic, might appear more attractive to those who have relocated to Florida. This could further exacerbate the situation. And let's not forget about the ripple effects this could have on the overall economy of Florida. The housing market plays a significant role in any economy, and Florida is no different. A softening market could mean less revenue from property taxes, which could impact everything from local infrastructure to public services. Additionally, the Federal Reserve's interest rate hike could potentially lead to a recession, according to Business Insider. This could further strain the housing market, not just in Florida, but nationwide. In such a scenario, even tech giants like Alphabet and Microsoft, which have shown resilience, may feel the pinch. But what about the international buyers? They have continued to buy homes in the US, as per the same article. But with a strengthening dollar, their buying power could decrease, possibly leading to a slowdown in their investments in the Florida housing market. The future may seem uncertain, but one thing is clear: change is coming to the Florida housing market. Let's take a moment to recap what we've uncovered today. We've delved into the current state of the Florida housing market, a landscape marked by an increased housing supply for sale, spiked home prices, spiked mortgage rates, higher insurance premiums, and higher homeowner association fees. These factors have collectively led to a market softening across much of Florida. We've also identified the factors at play. The Federal Reserve's 75 basis point interest rate hike, for instance, has sparked concerns about a potential recession. We've noted how the market volatility has subsided, but the impact on the housing market is still palpable. We've seen how these factors have strained demand. The relocation trends of wealthy Americans have shifted from major cities to suburbs and vacation spots, but the inflated costs have dampened the allure of the Sunshine State. A report by Coldwell Banker highlighted this trend, revealing how the demand for luxury properties in secondary markets has exceeded expectations, leading to bidding wars and rapid sales. Furthermore, we've explored the future projections and potential consequences. The housing market, like any other market, is a creature of cycles, and Florida is no exception. The current softening might just be a phase that will eventually stabilize. However, it's also plausible that this could be the beginning of a longer-term downturn. While the challenges are substantial, they also present opportunities for change and adaptation. The Florida housing market is in for a ride, and only time will tell where it ends up.